All right, let's start with the inflation story in this country. For the first time since 2019, inflation stayed within the central bank's target range for a full year, a mark of achievement for policymakers ahead of a potential tariff war that threatens to derail that progress. Just to recap, the consumer price index in this country ended 2024 with a second consecutive monthly deceleration. It was up 1.8% on a yearly basis in December. That was down from 1.9% previously, according to Stats Canada. And the median estimate amongst Bloomberg economists who were surveyed by Bloomberg was for a 1.9% gain. Now, the deceleration was driven by lower prices for food from restaurants and alcoholic beverages, which are exempted from sales tax from December 14th to February 15th. When you take out items impacted by the tax break, which made up about 10% of the CPI basket, the headline index would likely have accelerated to around 2.3%, but that still would be within the bank's target of 1 to 3%. So, what is the overall inflation takeaway for Canada's economy, especially with this looming tariff threat hanging over the country? Let's get some more perspective now from Dylan Smith, who is a senior economist at Rosenberg Research. Dylan, it is nice to see you.
Very nice to be here, John.
Okay, let's just start with your reaction to the inflation numbers this morning.
Well, I think we got a good number, essentially completely in line with what the forecasters were expecting. So, you know, in a time when we've had enough surprises from different places, no surprises from the inflation print, exactly what we expected in terms of the pass-through from the GST tax break. We'll see a little bit of give back going forward. But overall, I mean, we're pretty satisfied that the inflation picture is looking very stable and moderate.
So for those who have been very fearful around inflation for a very long time, the idea that tax breaks maybe change the recipe for December, that might be factually correct, but you're not concerned that it masks some kind of inflation problem that actually would exist?
No, not at all. I mean, you know, we'll see a little bit more consumption coming out of the fact that there was the tax break, and I think that explains part of what happens when you adjust. It goes a little bit above target. We'll also see in the February and March numbers a bit of give back once the taxes get put back on.
Right.
And so we should be ready to look through that. But overall, you know, we're in an economy with a fairly large disinflationary output gap. We're seeing easing labor markets, wages coming down, and demand not where we want it to be. And so, of course, the background is largely stable inflation.
Yeah, and I guess this is the balancing act for any economy or any central bank that's trying to help manage the economy. As you would like to see improvements on the inflation front, you also would like to see the economy not losing momentum. And here we are also worrying about this looming tariff threat. And Donald Trump yesterday kind of casually saying, yeah, maybe now the deadline is February 1st, but there's a lot of economists who say if it's across the board 25% tariffs, it's going to be hard for Canada to avoid a recession, number one. And number two, everybody keeps talking about whether or not tariffs lead to inflation. So how are you looking at where Canada's economy will be going, let's say, over the next few months?
Yeah, I mean, the first thing to say is very difficult to read right now, because to do that, you have to take a view on what's actually going to happen with tariffs. And I think there's a lot of uncertainty still. What was interesting about Trump's comments was that he was talking about tariffs, but he didn't talk about Canada having, say, abusive trade practices and that being a reason, or flooding the U.S. market. He talked about immigration and fentanyl. And so I think it's becoming quite clear that this is a bargaining chip that Trump's using. And, you know, so we'll probably see some extensions, negotiations. It may be that attempts to pacify him are successful, and yet there is still a very real risk that something does happen. Now, are tariffs inflationary? Generally, the answer is yes, but the effects can be very, very complicated because there's not just one channel. Obviously, a tariff on Canadian goods is inflationary in the U.S. Response tariffs are inflationary in Canada, but then you also have Canadian demand dropping, and that's disinflationary. But you probably have the loonie depreciating as well, and the bank easing interest rates. And so the net effect can be inflationary, but, you know, it depends on this very complex interaction of responses.
See, this is why it's nice to have these conversations with an economist, where there is a measured mathematical answer to the question. But you mentioned the loonie, which right now is losing some momentum against the U.S. currency. It was interesting yesterday, as soon as we saw some reports before Trump's inauguration that maybe there wouldn't be an announcement about tariffs on day one, it felt like there was very much a relief rally. So, you know, I don't know how much of what's happening with the loonie is just sort of a rattled market trying to put the pin in the right place, but But how do you feel about how the currency market has been navigating this whole situation recently?
Yeah, I mean, well, let's take a step back a little bit, say to about 6 months when the loonie depreciation really got going. And that was a combination of the fact that the Bank of Canada was easing rates much faster than the Fed was. That's natural. We also know that there are structural problems in the Canadian economy, low productivity growth, et cetera, that justify probably a weaker currency. So there was a lot of the move at that point that was very explainable. And the Bank of Canada was quite comfortable in saying, look, we can tolerate a fair amount of depreciation here. It's not going to stop us from easing. The economy needs some relief, and we're going to provide it. I think we're now hitting a point where it's getting a little bit more difficult for the Bank of Canada to continue to ignore the loonie. One, because the Fed's not cutting as fast as they thought. And two, because there's going to be a lot of volatility introduced by tariffs. And so I think for them, the loonie is going to gain a lot of primacy in their discussions as inflation fades into the background a bit for now.
So we have, I believe, in about a week's time, give or take, another decision on interest rates by the Bank of Canada. And there's also been this challenging equation of, well, if the Bank of Canada has to prepare for the possibility of tariffs, just the same way all the politicians in Ottawa are preparing, would they need to be more aggressive in cutting interest rates to help the economy?
Yeah.
And then there's this currency part that you're talking about. No easy job, but what do you think the Bank of Canada does next week? And what do you think they're going to be thinking about with any rate moves in the months ahead?
Yeah, so I think in the very short term, they're not going to want to rock markets too much. So I think they'll just go in line with pricing, deliver the small cut that they had priced, and signal.
Would that be like a 25 basis point?
Yeah,
cut?
I think the time of very large cuts is over. I think they'll do something small. But what's going to be really important there is the communication and what they say about how they're thinking about the outlook, because I suspect it will be something like, absent tariff risks, we would continue to cut gradually until we got to our estimate of neutral, right? So another, say, 75 basis points of cuts through the year. But there's all this uncertainty that we need to read, and so we're going to go a lot more meeting by meeting, will I think be the messaging. I think you might get markets pricing rates a little higher after that.